Hello, Oracles. Well, it is Thanksgiving week this week here in the US. So, what does that mean for the stock market? What can we expect this week? What have we seen historically from the stock market and the performance in the past that may give us an indication as to how we can expect the market to trade this week as well? Now, Thursday, with the day being Thanksgiving, the market will be closed. And then on Black Friday, the market closes at 1 p.m., so it will be a shortened trading day. Now, historically, what we have seen is this week is typically very bullish for the market. I think part of it is because we have lower volumes for trading. And when you have lower volumes for trading, you can typically see the market move one way or the other a little bit more than normal just because of the lower volumes. We see that historically. Now, we didn't see that very much this year. But historically, leading up into election times, we see lower volumes coming in. And in turn, we can see the market getting pulled down even harder than normal. So it also works in reverse. So this week here, if we're going to be seeing lower volumes, but it's a more positive sentiment behind everything, we can see the market push up higher this week. Now, a lot of times it's psychological. People are going into the holiday season. They're just mentally preparing to buy things for the holidays and buying gifts for others. So typically, when you go out, and maybe you've noticed it with yourself, when you start to spend, you feel more comfortable spending and you might spend a little bit more than you should. And that ends up happening. So that could potentially happen this week as well. People are just in that state of mind to go out there and spend money for gifts. And in turn, they might do the same thing when it comes to stocks. Some people do give stocks to each other for gifts. And it's a pretty awesome gift, I think. So, it's basically, paying for somebody's future. That's what I do for all of my nephews and my son as well. I put into their college funds some money, and I put aside money into an IRA for my son, and I put into another account for him. So that's kind of what I do is I'm buying for the future because these days kids have so many toys. So putting aside that money towards someone's future could actually benefit them even more and they'll be grateful for it in the long term. Think about how many toys you got when you were a kid perhaps and how many of those do you remember and right now and maybe I would have traded in some toys for some Apple stock in 1982, some crazy things like that are going on out there, but just think about those things that are going forward. And so when you're going out there to get some gifts for whatever holidays that you celebrate, perhaps maybe that's a good one to get for maybe nieces, nephews, children, whatever it is. But thinking about that mentality, that could be why we typically see a very bullish market in the week of Thanksgiving. So, looking at what we have going on this week, there's really nothing in the economic data that we're going to be getting out this week. It's really going to just be a holiday week, lower volumes, and if we follow historical trends, we will see a bullish market. I am going to be taking this opportunity this week to be selling out of a couple of positions to begin my consolidation phase. Now, my son is in town as well, so I'll be spending the day with him today over at my brother's. I'm also going to be getting my son sometime this week, probably Tuesday evening, most likely. So, videos will be limited for me this week. I will be putting out tomorrow a video on Palantir's gaps, along with the gaps in the QQQ. So pay attention for that one tomorrow because this week, with it being as bullish as it is, we might see some more gaps being created as we go forward. And cryptocurrency could be another one that also pushes higher this week. We have Bitcoin right now testing 100,000, seems to be bouncing off hard off of that. This was anticipated because when you're looking at it pushing to a very strong psychological level of that six-figure mark of $100,000, a lot of people have sell orders in right at that level. So you're going to hit that, the sell orders are going to trigger, it's going to bounce off, and then, people might reload and then try to do it again. And it's going to take a little bit more to push on through that. So we could just be seeing the selling off right now and just kind of consolidating around this mid to upper $90,000 range before we end up pushing through. I think on this bull cycle here, barring any major black swan events that are going on, we could end up seeing us push up to 125 to 150,000 when it comes to Bitcoin. Some people are predicting we're going to be hitting 200,000, and some people think we might hit $5 in Dogecoin. Personally, I'm a bit more conservative than that. I think, again, the 125 to 150,000 for Bitcoin, maybe we push up to hit $1 for Dogecoin, and then I think we're going to be selling down from there. So if we hit those levels, I do think that'll be possibly the top of this bull cycle, and then we end up pulling down to that $50,000 to $70,000 range. Don't forget, we came crashing down from 75 to 15. Last bull run, we hit a tripling. This time, I think we're going to hit a doubling, and then we got cut down by about 70%. So again, that could potentially happen this time around as well. So if we hit that 150, we may pull down to that 50 to $70,000 range. And again, at that point, I will be reloading. That's just how I am personally playing it. And I can be entirely wrong on this, but historically, that's how the crypto market has been trading in those bull cycles. So I trim a little bit off as we go up, and then I'm preparing myself for when we pull back down to be able to buy heavier at those lower levels. Now, the way I'm preparing for that is again with the consolidation starting this week. So if we're going to be seeing a more of a bull push this week, I may trim off a little bit more of crypto if that's what pushes. I'm going to be selling off my VYMI this week. I already have a sell order in for my FLIN, and I'm going to be looking at selling off WDTE. So for me, I've added some positions. I may be trimming off a couple of ones, like I added GUI and then I decided to put Tesla in instead. So I might end up selling off GUI because I don't want as many positions. And for me, I like things simple. And I know that I intentionally overcomplicated my spreadsheet and I over diversified my portfolio, but I do that for a reason. I do that because I'm like, all right, what is all the information that I could have? And then I look at what information I actually use. And then whatever I actually use is what I keep. But I don't know what I'm going to actually use until I give myself more than I need. So that's what I ended up doing. I gave myself more than I needed, and now I'm trimming it all down. So again, I'm going to be selling off of WDTE. Now it did perform well for me. I've got my all-time total return of about $322 or about 37%. But looking forward, I'm going to be trimming it down. But I really only realistically need one of these to be paying out every single week. And looking at my strategy here, I have it all broken down by what pays out. So GUI and Tesla both pay in the same week. I only need one. I'll choose Tesla. BITO and FBY both pay in the second week. Those here I'm going to see. I haven't got paid out from either of them. In a couple of weeks, we're going to be getting the payouts for each of them. So I will see which one I like more. Chances are I'll stick with BITO because of the Bitcoin bull run that we're on right now. And then I'll end up trimming off FBY. And so then there, I'm going to have one weekly one of YMAX because that has been performing well for me. And then from there, I'll be keeping YMAX because that pays out weekly. And right now it's giving me about a 20% return. I will keep Coney because that one has been kicking butt for me. And I'll keep AMZY. And I just picked that one up. But I like Amazon going long term. So I think this one will perform well in the long term, even though it's only to be a short term play for me. And so that will trim these down to 5 positions here. Now I go into my high yield plays, and I've got XDTE as another high yield weekly payout. So that's going to be paying out weekly as well. So every single week I'll be getting payouts from YMAX, XDTE, and one of these ultra yield plays as well. So that'll give me significant cash flow, but I'm going to consolidate into the best players there that I see for myself. And then as I come down here, I'm going to be trimming off. I just added HYBI. I might end up trimming that because again, I'm trying to consolidate. And this one here doesn't look like it's going to be the best, or at least anywhere in the top 5 of my performers in here. So I might as well get rid of that one. Realty Income has been an underperformer for me. I'm contemplating switching it over to ADC, but right now I'm just going to leave it as is. It performs perfectly fine. I don't have any issues with it. And then I'm also looking at Hercules Capital. They just went up on their dividend, but they're also a very specified play when it comes to BDCs. And if I'm anticipating a pullback in the tech sector, this one could face more of a pullback as well. So just going to keep an eye on that one. But I'm going to hold on to the rest of these and just monitor how they go. Now, here, as I said, I'm going to be selling off VYMI. Reason being is international markets haven't been performing as well. My total return is just over 8%, whereas all of my other plays in here are well into the double-digit marks and some are over 20%. So the returns haven't been as good. Despite the fact that it has the highest yield of the bunch at nearly 4%, the total return isn't what I'm looking for here, and I can definitely put that money into other places to help my portfolio grow even stronger. Plus, when it comes to the international market, many of the companies that are out there when it comes to the S&P 500, they're all in all the other countries around the world anyway. So you're basically into other international markets as it is. So for me, I'm not really as concerned about being specifically in the international markets because a lot of these companies are already in the international markets and I'm getting my exposure there. Now, under that same premise, FLIN, which I already took off of my spreadsheet, that one is very specific about India. I think India is going to be a massive emerging market going forward, but to the same concept, Tesla is already looking at going into India. Apple's looking at going into India. There's a lot of other companies that are already going to be looking at going into India as well. So again, with that international exposure from all of these massive companies, if India is going to be that next place to be, all of these companies are going to be in that market anyway, and I will have my exposure there. So looking at what I'm actually trying to generate from this portfolio is I'm really looking to try and generate as much cash flow as I can from all of these dividends while also providing an upward movement when it comes to equity appreciation and downside risk mitigation. FLIN wasn't really giving me any of those. It was really mediocre, if anything. I got a little bit of a decent return out of it when it came to equity appreciation. It only paid out every 6 months, and the dividend yield wasn't all that great. And if the entire market's going to pull down, so will FLIN. So for me, I just kind of looked at it and said it wasn't going to be performing like all of my other plays were, so it was time to trim that one off. And now looking at here at my growth plays, the only one that I may trim off of here is Sheeb. If we end up pushing up massively and maybe Dogecoin hits that dollar mark, if I end up doubling in Sheeb, I may cut it in half or I may sell out entirely. I haven't decided what I'm going to do with that one yet. But realistically, it's only $500 of my portfolio at less than 0.5%. I may just hang on to it for one of those kind of like lottery ticket gamble type plays where, hey, maybe it somehow makes it up to a penny. And if it makes it up to a penny, that's $183,000 for me. So that'll be my little bit of a lottery ticket play there. But otherwise, that's what I'm looking at consolidating. And I'm really just kind of doing so because as my portfolio plays out and as my strategy works, is I'm just kind of taking all the cash that I have coming in or any cash that I have from these dividends or the cash that I have from selling something, and I spread it out evenly amongst all of these different plays based upon the criteria I have set for it. But the more plays that I have, the more spread out that money is going to go versus going into some of the best opportunities that I have in my portfolio. So I'm really just trimming off things and consolidate into those best opportunities. And so that's going to be my next phase going forward. And that should put me at level 2, step 3 by the end of the year if I play this out properly. And at the end of the day, that's really what I kind of take a look at is I always do some reassessing when it comes to my portfolio, when it comes to my manifest list, and I just updated my manifest list through 2030. And because of all the consolidation that I'm going to be doing, and because of how I have focused myself and dedicated my habits towards reaching my goals, I was able to push my manifest list and get to my goals a lot sooner than I had originally planned. Now, of course, that means that everything still just needs to play out as it is. But if everything does play out, I'll get there faster because I have held on to these habits and I've been very disciplined with them. So that's really all it comes down to is just being disciplined with your habits and saying, hey, where do I want to be? What is my ultimate goal for this? And like I said, my ultimate goal is to get to a point where I have all of just passive income coming in from dividends where I don't need to work and I can work if I want to, or I can go out there and travel and buy real estate and do whatever I want to do versus having to trade my time for money for someone else's goals and someone else's dreams. And so once I realize that, I say, all right, well, how can I get there the fastest and what's the wisest way to get there? Well, I could get there easily by just getting a lot of money put into those ultra yield plays, but those have high expense ratios. Those are taxed at regular ordinary income, so I'm going to be whacked on taxes there. And they're very, very risky and they're very unstable. So you could have a lot of NAV erosion coming out of there and end up losing money in the long term. And on top of that, their dividend fluctuates so much, it's really hard to kind of, base a living off of. Where a lot of retirees who are playing on dividends, they like those nice stable things like REITs pay out on a regular stable basis, or you can get into a really good blue chip company like the ones that I have in my dividend growth plays, like the Procters and Gambles, the Microsofts, where they're going to be coming in year out, and the price of the stock itself may fluctuate quite a bit, but the dividend itself stays the same and typically grows every single year. So when I'm looking long term and I say, all right, well, when I'm 60 years old, what do I want for income coming in? Well, I want income coming in similar to what I have from my job. I want a regular weekly paycheck that's going to be coming in, and I want to be getting a regular increase every year on that income that is going to outpace inflation. And these are the things where I don't even look at yield anymore. I look at dividend growth. All right, well, dividend growth, I want to make sure that that is going to be higher than what inflation is going to be. Nobody knows what inflation is going to be in the future. But if we're around that 3% mark right now when it comes to inflation, I want to make sure that my raises are going to be minimum 3%. I typically would probably want more than that, maybe a 5 to 10% because, hey, why not? And there's a lot of companies out there that are growing their dividends at over 10% rates. So for me, if I can get an over 10% increase every single year, that's clearly going to be outpacing inflation. And that's where I want to get myself to. So that's why I'm picking stocks. And of course, nobody knows what's actually going to happen in the future. But that's where I keep on paying attention as time goes on to make sure that I'm in the right plays that are going to be doing that. And you can kind of see some that are going to do that. Microsoft is most likely going to continue doing that. If NVDA continues to grow the way they're growing, they're probably going to do that as well. And you look at stocks like a Procter and Gamble, who maybe they're only going to be doing a 5 to 7%, but that's still going to be outpacing inflation as well. And they're most likely not going anywhere anytime soon. So that's what I look at for a very long-term play, or I look at the SCHDs of the world, DGRO, and I look at all of those and go, all right, well, long-term, that's where I want to be. How do I speed that up in the meantime? That's where those ultra yields come in to get that cash flow coming in as quickly as possible to be able to add to all of those other plays so that in the long term, 6 years down the road, which is where my plan is at 2030, I will be able to live off of those other ones and I can get rid of those ultra yield ETFs altogether and not have to rely on any of that. So that's my long term strategy. So, again, when you're looking at your portfolio, just look out and say, where do I want to be at the end game? And what time frame do I want to get there in? And how can I create a portfolio that will help me get to that point? It's really all it comes down to. So, if you guys are interested in any sort of financial coaching, again, it's not financial advice. It's just financial coaching where I can kind of give you some guidance like this for your own personal basis and saying, hey, what are you looking to try and do? And I can give you a broad based approach on how to do that. And I can tell you guys what I did for myself to get myself out of debt and go from that $600 portfolio to a $60,000 portfolio in just 4 years. And that, of course, was mostly because I paid off my debts and I was able to invest more money into the stock market because I had paid off those debts. And then I invested that money into very wise places. And that really helped me get to where I'm at now. So if you guys are interested in that, I am opening up my book. My website is back up and running, oracleinvestments.com. I have to make some major updates to it, but you're more than welcome to check it out and see where it's at right now. But I'm going to be updating that and I will be opening up my book. And here I'm Eastern time in the US. And starting December 1st, I will be opening up my book Wednesday evenings from 6:30 p.m. to 8 p.m. and then Saturday mornings from 9 a.m. to 1 p.m. So if anybody is interested in that, the first half hour ish, and I'll work with you guys if I have nothing else going on. I'll spend more time with you. That's going to be completely free. And what I want to do from there is give you all the information you could possibly need, if I can, to help you achieve all of these goals, to get yourself out of debt, and kind of give you that baseline formula of what you need to do for yourself. And I want to provide all of that for free for you guys, so that this way you can start getting there on your own. Now, if there's something that you guys want to do, maybe as a follow up, where I can continually come back to you guys on a monthly, quarterly, or annual basis to just kind of give you guys some follow up accountability, then I will be charging for that, but it'll be extremely low rates, much lower than what everybody else out there is charging for it. It'll be $30 for a half an hour or $50 for an hour. And this way I can kind of just hold you accountable and say, hey, here's the checkup. How have you been doing? What's the progress you've been making? Maybe these are some things that you can tweak a little bit here to help you reach your goals even faster. But that's what I want to provide for you guys. So if you're interested, please feel free to reach out or comment down below. But that's all we got for you guys. Thank you so much for watching. I appreciate all of your support. Have a great one.